Testing the audio real quick, guys. Welcome back to another post trading analysis video. So, I am hyped up. Today was an amazing trading day. We took 3 trades, 3 wins. 2 of them were shared in advance on Twitter. The other one was a scalp I took in between and I had no time to post it. And we ended up netting over 8% today if we count the Solana trade that actually hit its target. So this morning we got another retest and it actually hit its target. I was talking about this setup on the previous stream from last night. So if you want to see that, you can go and watch that after watching this video. I just went over how I took this Model 1 distribution short. And today, this morning, we finally hit the target right here. Okay. So on gold, we actually had a long today. I shared it on my Twitter. But regarding the previous stream, I was telling you guys about, in general, I was expecting a lower high for a lower low on the 4-hour time frame. Just simply because we had broken that upward structure from the range low up. So skipping past all these points, this was the most recent pull. We broke that here. So my general expectational order flow was a lower high for a lower low, right? Well, when is that lower high confirmed? Once you start breaking structure on this retrace up, which was right here. So I was telling you guys that we actually broke it. So I was expecting price to come and visit this low, especially because above that low, there was nothing from a demand perspective that was looking good. It was just all sell side liquidity. However, in here, we didn't manage to grab like a good short because the way price behaved there, it wasn't really giving us any type of entry confirmation too short. But in the morning, or let's say later at night, let's zoom a bit more in when it has actually happened. Yeah, in the morning before London opened, we actually that low and we started SFPing it. Okay, so instead of breaking the low, we started wicking the low on the 2-hour time frame, indicating that instead of this being just a trend continuation, we can actually have a range in play right here, right? Where this is our range, and then from there we can play range deviations and potential Wyckoff accumulation or distribution schematics. So I always love ranges. That's where I make most of my money. So gold has been giving us a rough time regarding range deviation and Wyckoff trades, but it's worth watching it once you have like one of those days that we are having that we had today. So the moment we started SFPing that low, I immediately pulled out my range tool, and then the most clean looking and important structure high to break was the structure from the top down, right? So just skipping over some points again, this was your most recent market structure leg. So this thing is like sticky. Okay. So breaking this high in my books equals a full-on rotation. Breaking this high equals a rotation towards the premium pricing or the premium section of the range, especially because above this high we had nothing but easy to sweep buy side liquidity. And then on my Twitter, I actually also posted that I wasn't targeting higher than this volume area high. Just because it's a range deviation and it's not a full-on Wyckoff schematic. And you cannot target the opposite side of the range, the extreme opposite point of the range, if you don't have a Wyckoff schematic going on, right? Because ranges can rotate without taking extreme points. So we could just have a rotation up and then we come back down again. Maybe we create a Model 1 or a Model 2 from here and then we start coming higher. So trading a second tap, you cannot target all the way up to the range high, especially on an macro or on such a high time frame range like the one we are in right now. For the people that have been watching me for longer, You guys should know that if I trade second taps, meaning this was my initial range low and this was the second tap, this was the first sweep, okay? First sweep equals second tap. You guys know I want my range break, my market structure break, to also break back inside the volume profile here, okay? So I want to see the volume area low get reclaimed, and then once we get a market structure break reclaiming the volume area low, I will find a long and I will target either a supply in premium pricing or the volume area high or a liquidity point whatsoever. Okay, so what actually happened here? Let's just keep this volume area low for now on the chart so you guys know where that was, and then let's get rid of this. So what actually happened is, zooming in, let's see what was the highest time frame valid pull from the top down. Okay, on the 30-minute you have that 2 candle rule where you have 2 candles up, 2 candles down, so it's valid structure. On the 45-minute we have 2 candles up but only 1 candle down, so no, 30-minute is the highest time frame valid pull. So we want to see a 30-minute close above this high to confirm a break of structure. Well, what happened, instead of breaking structure right here, we SFP'd it. Let's make this thicker so it's more clear that this is the volume area low. There you go. So instead of breaking the high, we actually started SFPing it. Then zooming in, let's cancel replay mode, or let's enter replay mode. So zooming in, we actually SFP'd the market structure high. And you know what? Let me get rid of this volume area low. But we'll keep it in the chart. You guys remember for now that the volume area low is right around here. Okay? But I just want to have the clean price action so you can clearly see the market structure without getting distracted. But zooming in, we SFP'd the market structure high. Okay? That doesn't mean that our whole trade setup and our whole idea is over. We know, if you watch my previous stream, so the stream from last night, I also said SFPs can be temporary. Okay? SFPs can just be temporary. And when do we know it's going to be temporary? Well, if you start breaking structure, yeah, from the top down back to bullish, that means that price is going to come back towards that high. Okay, so I was actually watching this price action develop live, and this was your market structure high, and right here you broke that. Okay, you have to pay attention to the fact that this break of this high only confirms that price is going to come towards this high, because that's your main pull. Okay, this right here, that's your main pull, and then potentially higher or lower, you don't know. Breaking that internal structure here only confirms you're going to come back to that main market structure high. So once we had that big break here, I know I have to be aware that price can SFP this high and go lower. So if I enter here, my stop, I would have kept it above the low, and then towards that high is of course only a 0.3. And yes, you could have a higher target, but you're entering pretty high up. Okay, so let's say we got a very tight internal break that already entering right here up towards the high equaled like a 1% to a 1.5% gain. I'll be like, yeah, I'll take it, and I'll de-risk quickly. But in this case, if I enter on this internal break already, I know that if this SFP is not working, or if this break is not going to work and it's actually going to end up SFPing, I will be in a loss because my entry is right at that high. So I wasn't convinced when we broke that internal high right here. And what actually happened is, instead of breaking the high, we SFP'd it again and again, actually indicating a local, Model 1 distribution, which is not bullish at all. Okay, so we had our initial range high. You have your first sweep, you have your second sweep, model one distribution. You break the low, you have the sell side or the sell side liquidity here, and then you tap the range low. You could have you couldn't have scalp shorted because this was the entry confirmation and this is the invalidation, and the take profit is right around here. So you could have shorted it for a 0.5% gain, but I would never take a trade that's only um, rewarding me 0.56% if I'm risking one, right? My threshold is mostly like 2.5. And sometimes if I'm really sure about the trade, I'll take a 1 to 1.5, but it depends a bit. So we got that local model 1 distribution, grabbing sell side liquidity, but of the instead of the distribution having any follow through past the range low, we actually just deviated the range. We extended, we just deviated the range right here. Manipulation of retail positions, that thinking we are breaking structure, and then we broke structure back to bullish. So for the people, let me see what the range deviation was looking like. It was actually break back inside. I was going to the gym at this moment in time, so I wasn't paying attention. But you could have longed this right here, and then you could have targeted the high. But we also know that price could come higher, right? Because if we're breaking that high, maybe we're breaking that main high that hasn't been broken yet. So this break of structure high has now been moved to this range high, okay? Because we've been SFPing it here. So we're just trailing it up. So we know if we break this high, we could actually potentially target all the way up towards, let's say, around the volume area high, wherever that was, right? So you could have tried this trade knowing that we could break the main high, which is also what happened eventually. But where I got my entry was when I checked my phone on the way back from the gym, and I enter and I go in the 30-minute. When we broke that range high, we actually also had that 30-minute candle close we were talking about. And on the 30-minute time frame, you can see how good market structure is doing its job, because we failed to take out the high with an SFP. We come lower, higher, failed to take out the high, made this a weak low. We came to the low, failed to take out the low, made this a weak high, and then we came for the high and we broke it. And after, we get a higher low for a higher high. So market structure was really doing its thing right here, where you have your SFPs making the other side weak. So right here, you have your SFP, so this low is weak. Then you came down to take the low, but you took the low and you SFP'd it and you made this high weak. Then you broke the high and you came back for a higher low into this 30-minute order block. So it was very, very, very clean behavior from gold from a purely a market structure perspective. But where my exact entry came into place is that I was checking my phone on the way back, and I'm seeing this this break right here indicating like, yo, we can actually we have acceptance back inside the volume profile. And from a market structure perspective, we have broken market structure. So expectational order flow after this break is a higher low for a higher high. We came into this 30-minute demand zone, which is the extreme demand of the move, the lowest demand before the low. And we're also back testing the vol. So zooming even more in, after seeing it on the 30-minute time frame, I was like, wait, hold up. We don't just have that. As I said, we had this range going on, right? We had this range going on right here. After this deviation that broke structure, we left behind range demand, which is this local range demand is equal to that 30-minute order block. Just on the lower time frame, it looks like range demand. And we have a Wyckoff model 2 schematic going on, where you have your initial range low, the first sweep, and the retest. And actually, after this is a retest after breaking structure already, okay? So I zoomed even more in to see if we had internal structure to have a reconfirmation, and meaning that when do I know that the higher low for the higher high is going to be in regarding this structure pool, right? When do I know the higher low has taken place? If I break structure from the top down like this. Boom. So I was following structure from the top down to confirm a higher low. Once that breaks, right here, this is where that breaks. This is where I entered on the break, put my stop below the low, and then targeting all the way up to, I think it was around here. Let me check from the volume profile standpoint. Right here. Boom. 3% gain. Boom. Clean, guys. It's so clean. And I actually had a bit of a higher risk on this one. It was like 1.2, 1.3. Just because I rounded up upwards. So I rounded up. Okay, I don't know if I was saying that right, but or like around a 1.2, 1.3% risk, and still have 20% of the position running. Okay, just because I don't really see any clear resistance, like we had some already mitigated range supply above us. So that's why I took a take profit here. You had such an aggressive move up after grabbing all these buy stops, so you can expect price to cool off. So I took an 80% take profit here, and I still have 20% run. At this point in time, my stop loss is at entry, so it's either I make almost 3% on this trade, and then the rest gets stopped out, or I make another extra, I don't know, 1% on this move up. Okay, but as you can see, we had the bigger range deviation going on where we were trading the second tap, but then locally speaking, we actually had a Wyckoff accumulation schematic confirmation. So it's a local Wyckoff model 2 in a bigger single range deviation vibe. So very high confidence play there, and very happy with that trade. It became time gold actually gave us a good ass move. So yeah, very nice to see. I did not take it on my Alpha Capital account because I was walking back from the gym and I was on my phone fucking up MetaTrader, and then we did have actually a news event going on. So I didn't know if I could actually enter it. I didn't know all the news rules. Like on 14:30 right here, there's actually a news event. Didn't end up doing that much. But if the chart is looking this bullish, trust me, the news is going to push price higher. In my opinion, price will tell you what the news is going to be. So, beauty of a trade on gold, and then I had a little scalp play on Matic, which actually that was a beautiful TP. I front ran my TP below this low, right here, which I told you guys on Twitter, but I did take this with a 1.5% risk. Why? Well, we were deviating the range low on Matic, potentially actually tapping into demand and potentially forming a Model 1 accumulation here, but then zooming in, we were trying to break the market structure high. We actually got that break, followed by a higher low and a higher high. But after that break, we create like a local struggling to take out the high. And what I saw was one, where you have the tap, the 2 tap, and the 3 tap. What bothered me with taking the full on 1% risk is that you have these tiny SFPs of the highs in between, which I wasn't really liking that much. Normally I will not take that, but there were such sketchy candles that I was like, I think we can disregard this and we can just look at the bigger move, which is this, right? But it happened here again, right? So on the bigger pool, it does look clean, but I hate ignoring all these tiny details in between because I just want everything to look perfect. Okay, so we did have a clean looking market structure break here, And then what actually made me take the trade was that when I pulled my volume profile, we were having an imbalanced range. Okay. What do I mean with an imbalanced range? Is that all the volume is in the premium section of the range. So this is the premium section, above the 0.5 in the range high, and then this is the discount section below the 0.5 and the range low. So as you can see, the volume area low, the black line, you don't even see it because it's on the purple line of the EQ, but the volume area low is actually at the equilibrium of the range, meaning there's no volume in the discount section of the range compared to the volume in the premium section of the range. So whenever you have these imbalanced ranges, they tend to work extremely well with having a rotation back down to extreme discount and the range extreme point. So we did have a good looking break, and we did have a 3-minute supply zone here, this order block with imbalance that we came back for. So I didn't enter on the break because it wasn't worth it from a risk to reward perspective. Because if I entered here and I targeted the low, it's only a 1.2%. And we had a reason to come back up. So I was like, if we come back up and we get a rejection, I will enter. So we got the pullback up after breaking structure. So in general, after breaking the structure, expectation of order flow was that lower high for the lower low. I saw the mitigation of the supply zone. And once we got that pullback, I entered short here. I put my stop above this high, and I targeted this low. I put it like this on my chart, but I put my take profit. In general, I like to front run my take profits, just because I think Mr. Market Maker hears me or something. So I actually put it below this low right here, like this internal, like the last liquidity point before the extreme point. And I took a 0.5 risk. So I managed to get like 1.5%, 1.4% on this trade eventually, because I did enter a bit quicker. Yeah, I calculated a 0.3 stop loss, which is just easy to calculate. So cheeky little scalp in between, and your sign to get out was when you started this Model 2 accumulation, breaking structure, and then reconfirming your structure break here, which was exactly our gold long confirmation, right? This was literally our gold long setup entering on the break here. So if you see that against you on such a low time frame after being short, either just put your stop to entry and let yourself get stopped out, or take some profits. So that was the Matic scalp. Also a nice little Wyckoff trade, just like gold, even though gold was also combined with a range deviation play. And then on Bitcoin, I shared this one actually live. Normally I don't do that, but I told you guys exactly on my Twitter when I entered. If you go to my profile and you go up, I literally tell you guys here. Here. Yo, took a higher risk long here. Mark such a continuation trade backed within a Wyckoff Model 1 accumulation schematic. Made good money today, so cheeky higher risk up in between doesn't hurt. Definitely higher risk since you are in premium pricing. So what I mean with that is that I heard a lot of people call for lower. Even a few good traders that I know called for lower, but I wasn't convinced, just because, and I think this is where people get also sometimes tricked up with Wyckoff, is that, let me just disregard this. Let's get rid of this. Keep it fairly clean. We take a sip of my water. So we're in a bigger range, right? This is your bigger range right here. This is your range, and then within that range we are in the local range right here. Okay, this is your other range. Ranges within ranges. That's just Bitcoin basically. And we were breaking structure from the low up back to bearish here. So in general, expectation order flow will be a lower high for a lower low, which we did end up getting. But zooming in, you actually had your own little range going on right here. Okay. And I actually realized this after making a post about Bitcoin on Twitter. But right here, let's keep it like this. You had a range going on, a local 15-minute range, okay? And you could argue that, yo, we have our initial range low, we have the first sweep of the range low, we have the second sweep of the range low, indicating a potential Wyckoff model 1 accumulation. But you actually, let me see, did you break up or end up breaking structure? Yeah, right here, you end up breaking structure. So maybe you guys were like, okay, you know what, I'm going to enter along here. It was 4 a.m. for me, so I wasn't awake. I'm going to enter along here, put my stop below the low, and then target the high, right? For a Wyckoff Model 1 accumulation long schematic. But there are a few things. If you have to draw a break of structure line this fucking long on such a low time frame, that's not good. Like, price is trending down pretty fast here, right? So it's trending down pretty fast, and you have to draw your tool like this in order to get a break. That's not the most bullish sign in the world. In general, or not in general, but also you had just front ran this low right here. This did not touch. This low is 67,135.5, and this is 67,136. So a 5 cent difference. So instead of taking the low, it actually front ran it, leaving a double bottom. Okay. And Bitcoin doesn't like double bottoms. On traditional markets, you can leave the double bottoms behind and not be worried about it. But on Bitcoin, no. That doesn't happen, okay? Secondly, your most important structure from the top down that you need to break in order to confirm that you're coming to the range high is this downward spool, okay? Just this downward spool, the highest time frame downward spool. You have to break this high in order to come. You have to break this high in order to come to this high, okay? If you don't break that high, you're not coming. So even if you did take the long, the moment you saw SFP like this while breaking structure back to bearish, that's your sign to get out, okay? That's your sign to get out, especially with this liquidity at the bottom. That looks like a distribution that's failing. If Mr. Market Maker was actually fully involved right here, why would he let price break back to bearish and come back down again this far if there's no good looking demand remaining here? Like, it doesn't make sense, okay? So you could think now, but like, Lars, if we take the high and we come down and we take the low once more, we have a 4 tap, a 1 tap, 2 tap, 3 tap, 4 tap. That's not a Wyckoff schematic. Wyckoff schematics are always 3 taps. And you're right. However, with ranges on a lower time frame, is that they can turn into bigger ranges on a higher time frame. And in the process of doing that, it can skip over the first few points. What do I mean with that? If I disregard this, I'm on the 15-minute time frame right now, okay? What if I zoom out to the 3 hour? And you'll see exactly what I mean. On the 3 hour, this is not a valid pool because you don't have 2 consecutive bearish closing candles. This was an inside bar candle, okay? This candle is within the lows and the highs of the candle before that. So that doesn't count. So this is not valid 3 hour market structure. No, your 3 hour market structure looks something like this, where you broke it back to bearish here. This is one bearish break, and then you have the high, and then you take the low again. So pulling a range on the 3 hour time frame, this is your starting point. This is nothing. This is absolutely nothing. And this is oftentimes, this happens all the time, where you have a local range going on, right? It's a local range, and then it turns into a bigger range after a few big deviations, and you can just skip over that first bit of price action. Oftentimes you have a local Wyckoff schematic going on that hit its targets, and then it expands, and you can skip over the first few points if you zoom out. So if you zoomed out, you realize this is a starting point on a higher time frame range, and then we can still have a Wyckoff Model 1 accumulation schematic where this now is your tab 1, this is your tab 2, this is your tab 3. And it makes sense to take this low and create a Model 1 because it's a liquidity point, right? So I was expecting higher, especially once we break structure from the top down, right? So once we broke this right here, once we broke it right here, and we're respecting this upwards pull, tapping into demand and going higher again, I was like, yeah, this is a model 1. And what is the order flow objective of a model 1? The range high, okay? And besides that, we also had some extra confluence there because we had the range supply right above that range high, right here. Boom. So one of my setups for my playbook is actually trading market structure continuation trades if you are backed by a Wyckoff, okay? So in this case, what I mean with that, just enter based on a market structure break and a continuation of the trend if you know that the objective is to go to the range high, because then you're trading with the trend, right? You know the range high is the order flow objective, and let me follow up the trend and keep on longing. So where did I find my long? Well, let's look at it first from a demand perspective. I was just following up my market structure. So from the top down, you got that break here, and you got higher lows and higher highs. This is a higher high, and we left behind this good-looking 5-minute demand zone. Okay? Not only was it a 5-minute demand zone, if we look at it from a volume profile perspective, we actually broke out of the volume profile, and there was also a back test of the volume area high. So there was a clear indication of price either backtesting this and bouncing away towards the range high, grabbing all buy side liquidity, or breaking structure back to bearish and getting acceptance back inside the range and just go lower. It's a key point, okay? How do I know it's going to be a higher low for a higher high? Again, if you start breaking structure from the top down, back to bullish. Once you break that back to bullish, that's going to confirm a higher low for the higher high. Okay? So zooming in on a lower time frame, we actually got that confirmation right here on this candle break. And that's exactly where I longed it. And that's exactly where I posted, yo guys, I am long. It is a higher risk long. Oh. It is a higher risk long, okay? Because I am right here. Because I am entering in premium pricing if you look at it from this bigger range perspective, right? This is your bigger range. I'm entering a long in extreme premium pricing, okay? I just knew that the order flow objective of the move was to hit this range high and tap into this supply. So I was fairly confident, and then to catch a very good RR trade, instead of putting my stop loss below this low, I followed the market structure from the low up right here. And I was like, there's no reason for price to come lower than this low, because all the demand is above it. Why go lower? It didn't make sense to me, you know? It was a clean looking range demand, so for all the internal structures to align, it had to bounce from here. So I entered on the break itself, kept my stop below the internal low, and then I went to dinner, and then I got an alert that my TP got hit for an extra little 2.86, if I remember correctly. Right here. Oh, I ended on the 1-minute break. I want it to be exact. I want it to be exact. On this break, stop below that low. I actually did the calculation. And then here. Or 2.68. Yeah, 2.68. So this also just shows you that you don't have to catch the extreme points of a range to still get a good entry, right? Because let's say you manage to get into this trade on this bullish expansion away after sweeping sell side liquidity, and you got in here and you put your stop here and you target the high. You have a 2.57 RR trade. I have a better risk to reward trade in this tiny move here. I am not supporting you to long in premium pricing the way I did. It's also just my experience that allows me to do that, which will come for everyone over time. But yeah, don't be afraid, and don't feel FOMO into into not catching the trade at the extreme point, because along the way you will find an entry that's an even better risk to reward. So my throat is starting to kill me again, but I hope I made all my setups clear that I took today. As you can see, we had a Wyckoff local Wyckoff Model 2 accumulation long on gold, being backed by a bigger range deviation play. We had a local Model 1 distribution on Matic, and then we had a market structure continuation trade being backed by a Model 1 Wyckoff on Bitcoin. So as you can see, you're just hearing Wyckoff everywhere, and range deviations everywhere, because that's just my trading style, and those are my entry models. So yeah, hope you guys learned something. Hope you guys had a good trading day. If you liked the video, maybe subscribe and like, and I'll see you guys tomorrow, Friday. Let's end the week with a bang. See you guys. Love you guys. Peace.